Welcome to the Informed Minority, where we break down the markets using ICT concepts. Today we'll be breaking down the trades that took this week. If you're ready to level up your trading game, you're in the right place. Let's dive into the video. I want to thank God for giving me the ability to do this. For the last 4.5 years I have been trading, and about 5 months ago was when everything started to shift, and that was when I really prayed and asked God to help me with this. I couldn't do this on my own. I'd been trying to do it without him, and it didn't really go very well. And I invited God in and asked for his help and his wisdom. My whole trading experience has changed drastically. As I'm trading, I have my Bible open. I started doing that yesterday. There's this verse that I have open, and it's Proverbs 16:3. Commit to the Lord whatever you do, and he will establish your plans. That's what really happened here. I just want to start it off with that before we get into the video. We'll be going over the trade I took Wednesday, February 19th. 2025, the MNQ long. The blue arrow is where I bought, and the red arrow is where I sold my position. We always like to start off with the week. We need to figure out what days are high probability for us and what days we're looking to avoid. So if you've seen my videos, I would like you to pause the video right now and see if you can figure out, before I go to the next slide, what days I avoided and what days I traded on. And let me know in the comment section below. So I avoided Monday and Tuesday because we had a bank holiday on Monday. Tuesday was the day after, but also we had FOMC. So the focus days for me were Wednesday, Thursday, and Friday. We always like to have a narrative in our trades to figure out what can we use to frame a setup for us. So for this trade, it was the new week opening gap high, February 16th, pretty much the current week. We had this order block. We had responded off of this, and this is all post FOMC. My trade was up here. We had this high, and so I was looking for price to end up trading higher. We also had the clustering of the new day opening gaps below here. Everything was in alignment for us to trade higher. We also had this new day opening gap, which we failed to get to, but again, that was the target that we were looking for. Here are the first presented fair value gaps. This is a chart that I use to kind of help me figure out where they are, what I should be looking for, and to see support around certain areas. I like to figure out when they form because it lets me know what type of market I can be expecting. But since we were trading in the PM session, this is more of just knowing and locating where they are. As I always do, I like to break my charts from the higher time frame down. This, I believe, is the hourly chart, and as you see, we have an hourly inverse fair value gap right here. I was using that as an idea for us to trade higher to take this buy side liquidity, and I was looking ultimately for this one. We go down to the 15-minute chart. We had traded down to this order block here. We used the wick. Notice how the wick supports price. Inside of the hourly inverse fair value gap, we have this order block here. Then we have another one, which would be a propulsion block. Notice how the bodies stay above, or the color outside aligns a little bit on the inverse fair value gap on the hourly time frame. But notice how they respect this 15-minute order block and then trade higher. So I was expecting this to be a breakaway gap, and I was expecting us to see if we could trade a little bit higher. We get on to the 5-minute chart. Now, I did see this occur, but since it was before FOMC, I was not willing to take the trade, which is fine. But this is again showing support. Look at where the bodies are closing and the wick. This is also a breaker in a lower time frame. And so where I got my idea from was up here. Notice how we had this fair value gap here inside of the inverse fair value gap on the hourly time frame, and also the 15-minute order block. So I was looking for the 15-minute order block to hold, but we did have this 5-minute fair value gap down here. So I mapped it out as an institutional order flow entry drill. And notice how where the bodies are closing, they cannot close down here, and we fail to get to the middle portion of this gap. So when we expanded above, I was using this as a breaker on the 5-minute chart, but it's also a breaker on the 1-minute chart. And this gap, when it traded down into it, was expecting us to trade higher, which we got there. So we're going on to the 1-minute chart. We have FOMC right here, so I have to trade after. We have this breaker block here with this gap that coincides with a 5-minute fair value gap. But when it traded down into it, that's where I took my long. My stop loss below here, looking for us to trade up here and then ultimately higher. I didn't take anything off up there. I was thinking about it because of how late it was in the day, and I don't normally trade the PM session. In my model, I look for 50 handles, so this was about 37 point something. I ended up moving my stop loss up here. It got tagged and then went higher one more time, but ultimately fell lower. That's okay. This is one of those trades where it doesn't expand, and that's all right. So here are the macro times. Always notice where the turning points are. It's very important to know when you can expect turns to occur in the market. I like to end my trades with, the statistics, but also how can I improve and what did I do well. On this trade, the time in the trade was 22 minutes. On average, average, my trades take around 7 to 10 minutes from entry to exit, but the time stop that I have is 30 minutes because, as I saw in my back testing, they usually occur within 30 minutes from entry. The time in drawdown was about 1 to 5 seconds. It was very short. On handles I was in drawdown was 2. The handles that I was able to take from the market was 14.75, and the maximum it went was, for me, was 37 handles. So what do I need to improve on in this trade? My heart was racing in anticipation of the trade, and I know that's something I need to fix. There was some advice I got from my girlfriend doing some breathing exercises, and I'll start doing that. It's not that I'm afraid of the trade or anything like that. It's just the anticipation feeling of knowing that it's coming, and then my heart starts to race. I don't want to have adrenaline rushes when I'm in trades, so I know that's something I need to work on. What did I do well? I waited for what I wanted to see, and I placed a trade. I stayed true to what I saw and didn't talk myself out of it. When initially it came down here and it didn't hit where I was looking to enter, it went up. I was going to close the trade and walk away, but I'm glad I took it. It was a win, which was very minor. But the fact that I stayed true to what I saw and allowed the trade to play out, and I followed my trading plan. I went into the day knowing that I was going to trade with less leverage than I normally do, and I'm very proud about that. So now we're going on to the next trade. Thursday, February 20th, the 2025 MNQ long. This was the trade that I took. The blue arrow is where I bought, and the red arrow is where I sold my position. We always have to have a narrative or framework for what we're looking for. I saw us down here at the new week opening gap high. Again, I thought that we could start to trade a little bit higher. I was using this level as a potential area for us to move from. We also had a lot of overlapping new day opening gaps, which I thought that we could use to trade higher. Here's the first presented fair value gap chart. This was the first presented fair value gap from the day. We were down here. I was expecting us to come up here, and I saw these highs, and I thought that those would be clear targets for us to reach for. Something else that I thought was a key element was we had this order block, and I talked about it on this live stream. I would expect to see a response from this order block exactly in the hourly chart because it overlapped with a weekly high. So I'd expect us to then bounce from here and trade higher, and I was just waiting for a setup to form. On the 15-minute chart, there was really nothing of significance. Later on, there was this 15-minute fair value gap, but in the live stream, I could tell that it probably wasn't going to hold based off of how low we were in it because we were unable to get to the middle point. On the 5-minute chart, we had this fair value gap, which I would have loved to see remain open. We had this order block, and so we traded up here, and I started to notice again how small these candles are, and that was a little bit concerning in the trade. Here's the trade on the 1-minute chart. I saw this support off the weekly high, this fair value gap. I saw the body stay here. I initially wanted to see us come down here, and I would have taken a trade there to then go up higher. It would have hit, but that was not the case. I said if we go above this candle, it can create a fair value gap. I saw this as a breaker, and I would be willing to take it, and that's what I did. It went up a little bit, came back down, went up, and then just sunk. This is the macro time. As you see, it eventually went higher. Look at this day, really consolidating, pretty much just sideways trading. Not something that I want to be a part of. I was expecting more of a low resistance day, but it ended up being high resistant, which is fine. This is the trade setup. This is what it looked like. I like to go over my statistics, but also what can I improve on and what did I do well. The stats for this trade, I was in the trade for 22 minutes, which is very long, and so to be in the trade for 22 minutes was also concerning. The amount of time I was in drawdown was 13 minutes. The handles in drawdown was about 11 before obviously getting stopped out. The handles that I lost were 34.75. The maximum handles it went was 35.50. At some point in this trade on the live stream, I saw that it was kind of acting like this. I didn't like this at all. I actually did want to move my stop up, but I'm glad I let it play out because it gave me a learning experience or lesson when the trades aren't responding the way my other trades look like, where they're really fast, kind of sudden, not in drawdown, very long. This kind of gave me an indication that I should have closed the trade a little bit earlier, especially when we failed to close above this candle. After coming down here, that would be an order block. We couldn't even close above it, and we traded lower. What can I improve on and what did I do well? So what can I improve on this trade was I was getting a lot of indication that price was not acting in a way that I usually see in my better trades or trades that end up moving away with some speed. I was thinking maybe I'd take something off the table or just close the trade completely. I also think that when I was looking at ES, I saw that there was weakness in ES, and I saw a fair value gap get closed below before this had even happened. And I told myself if I did see that, I would close the trade, and I ended up not closing the trade. So I think that's what I can kind of improve on. It would have saved this loss. And what did I do well? I waited for a clear setup for it to form and I took it. And I was also able to identify areas where price would bounce from. So be happy about that. So that was the last trade I took this week, which was Friday, February 21st, the MNQ short. The red arrow is where I sold and the blue arrow is where I bought my position back. Back to our regular programming. I didn't have the higher time frame charts in the other one, but we got it on this one. Look at the higher time frame. I was originally looking for these highs up here to get taken, but we had this daily volume imbalance you see here, which we were unable to break. We did have SMT here, which we'll see later, and the targeting this low way down here. Originally, I was looking for buys at the beginning of the day, and I thought that this was just weakness for us to end up trading higher, but that was not the case. This just kind of melted. So I was expecting us to trade lower. I had marked out this specific low where we could see price trade down to, and it went way beyond that. So we have to have a framework or an idea of what we could be looking for. We responded off the current new week opening gap from December 15th. This was my target from where we were. If you go on the live stream, I note that 22,053 is where the top of the new week opening gap is, and I had my take profit right above it. So this was a target area for me, even though we had this block of price action over here, which would be considered balance. For us to go below this low, I believe there could be a shift in the market. So here's the first presented fair value gap. It formed around 937. Again, I like to just note when they're forming because it gives me an x-ray view of how I view the market. So I'm going to go from the top down. The 15-minute chart, we had this breaker. The price had traded up into it with SMT on a higher time frame. Price had traded up into it, tapped it, and went lower. So that's an indication that price is weak. On the 5-minute chart, we also had a breaker here, and then this fair value gap, which I noted. I said on a live stream, I wanted to see a fair value gap get created on the 5-minute chart before I would take a trade, because I thought that it would be more likely to pan out if I saw a 1-minute fair value gap overlapping with the 5-minute fair value gap. And we'll get into the 1-minute time frame, and it'll make a little bit more sense. So I noticed that this is not the breaker. It should be on the two blue candles. But this is the 5-minute fair value gap here. And then here's the first presented fair value gap that formed at 937. So what I wanted to see was us have this overlapping or stacking of the fair value gaps before I would take a trade. But I honestly didn't trust it yet. So we had news at 9:45. I wasn't really sure if this was going to respect price or if we were going to go a little bit higher. So after the 1-minute order block, and it respected that and then traded below, I saw this as a propulsion block. After hitting the breaker, I was willing to take it there. As soon as it closed below and traded up into this propulsion block, I took the short and was looking for 50 handles, which ended up getting me out right before the new week opening gap. Again, this is the trade setup. I'm going to go over the metrics for this trade. I was in the trade for 10 minutes. The time in drawdown was about 1 to 5 seconds. I didn't have a lot of drawdown in this one. The handles I was in drawdown, I would say maybe 1. I don't even think it was that. The handles I was able to take was 52.50. The maximum handles from this entry to where it ended, it probably was like 300 or 400 handles. So that's kind of nice. I mean, I only looked for 50. I'm not upset. It's amazing that I was able to do that, and I hope that if anyone was taking trades and they caught that, man, congrats. What do I need to improve on? Again, for me, I kind of talked about in the beginning of the video how I have my Bible out, and just reading my Bible when I'm starting to feel any urges or anything that I don't really want in my trading. So that's something that I'm going to improve on, and just reading the verse that I had said in the beginning of the video. And what did I do well? I was very patient. I didn't rush in just to get in because I saw it was going lower. I was able to see that my initial bias was wrong, and I flipped when I saw my setup forming. So again, this is just a recap of this week. I hope you were able to learn something. Thanks for tuning in to The Informed Minority. If you enjoyed today's breakdown, don't forget to like, comment, and subscribe if you'd like to follow along my trading journey. Your support means the world, and I'm looking forward to seeing you in the next video. Peace.